welcome back to the channel. Today I want to talk about something that has been on my mind for quite some time. The growing trend of people investing in equities with the idea of getting rich quickly. You have probably heard it too. People saying things like, the market is on fire right now and I have made tons of money. I have doubled my investment in just few months. It sounds tempting, right? But here's the problem. The market doesn't always go up, and thinking it does can be a costly mistake. In this video, I'll break down why this mindset is risky. Over the last decade, we have seen Sensex reaching new heights, crossing 60,000, 70,000 and even 80,000 for the first time. This incredible growth has made many people think that markets only goes up because that is what the new investors have actually seen. People are investing in equities like they used to invest in fixed deposits or RDs once. But here's the reality. Markets just don't climb, they also fall. Many have forgotten about the crashes and slowdown that can wipe out gains in no time. In the past, we have heard such news too. Markets are down 25% year to date. Nifty had touched its all-time low of last 5 years and is now trading at 2200. 3-year SIP returns were in minus in 2009, 12 and 13. Nifty crashed down 60% between January 2008 to October 2008. For 6 years between 2008 to 2013, markets did not give a penny return. And yes, that's true. But to many young investors, these market crashes feel like old stories, something from pre or post independent times, things they have heard about but never really experienced it. And they think this would not happen to us. But here's the catch, it happened just 10 years ago and can happen again. Most investors today have only seen markets drop for a few days or a week before it bounces back and hits new high. We have seen it happen with election results, during Israel-Palestine conflict and many more such events. This has led to a mindset that market goes down slightly but always comes back. And it's this kind of thinking that I'm actually afraid of. During one of the conversation with a prospective client, he said, Ashish ji, I'm a conservative investor and I don't want those 40% return on investments. I'm happy with just 20. I literally fell from the chair thinking, ये 20% return on investment कब से conservative हो गया भाई? I thought conservative investment तो कोई 6-8% return होते हैं. For those of you who don't know Warren Buffett, who is one of the most successful investors of all time, he could barely manage 20% return on investments.
And there's no one in the world we think can earn 20% with big money.
Point is that equity as an investment is a great tool for long term. It converts your thousands into lakhs and lakhs into crores in the long run. But at the same time, it can convert crores into lakhs and lakhs into thousands in the short duration. So while the potential is huge, it's important to remember that road to investing in equities is not a smooth ride. Equity requires patience, discipline, and a clear understanding of the risk involved. If you treat them like a get-rich-quick scheme, you could lose more than you gain. So before you jump into equities with a big expectation, remember these tips. They might sound simple, but they are powerful if you stick to them. Trading and investing are not the same. Follow proven advice from seasoned investors, not the latest news or flashy social media posts. Set up your SIP and forget about it till you near your goals. Avoid chasing high return or the latest trends. Investing is a slow and steady process, like building a successful career or a business. If you're serious about building wealth through equities, keep these tips in mind. They will help you to navigate the ups and downs without losing your calm. I hope you found this video helpful. If you liked it, share it with someone who might benefit. And don't forget to subscribe to the channel for more such insights. See you in the next one.